Now, 60 to 90% of traders lose money, and this is a very high statistic, but in most cases, traders are actually making the same mistakes. In this video, I'm going to be covering the top 3 mistakes that traders make and biggest reasons that they lose money. So mistake number 1 is over-leveraging your trades or using leverage that is too high. As a new trader, you might be tempted to use leverage, particularly if you're putting in a very small amount of capital to increase your potential earnings. Now, this is not always a bad idea, but when you're starting out, it's very prudent to be cautious with how much leverage you're using. So say, for example, you start with 100 USD and you leverage it to 1,000 to 1. This means that you're effectively trading with 100,000 USD or one lot. So now if the trade goes in the right direction and it goes up by 30 pips, you would make $300. But if it goes down by just 10 pips, which happens all the time and which can happen in a split second, depending on the asset you're trading and how volatile the market is, then you'll lose that $100 before you even know what hit you. So in other words, be very cautious when you're using leverage. And use very low levels of leverage when you're starting out. We always recommend that traders who are just starting out in the Forex trading space should really only use leverage of up to 10 to 1. And also start with very small amounts of capital. If you highly leverage your trades and use a lot of capital up front, you're very likely to lose that money very quickly, and it'll of course put you off trading. If you want more information on how leverage works, you'll find a link to our leverage video in the show notes below. Now, the second mistake that most traders make is they don't set a stop loss. Now, a stop loss is basically an order that you set at a certain number of pips from your entry point to say that if it hits that level that you want to be stopped out or you want your trade to be closed. If you've bought an instrument, you'll set that stop loss a few pips below your entry level. And if you're selling an instrument, then you'll set your stop loss a few pips above your entry level. And I want to show you why setting a stop loss is so important. So over here, you'll see a chart with an engulfing candle that appears after an uptrend, and you think that you can now ride the downtrend. So you place a sell order and you don't put in a stop loss and you go grab a coffee. When you come back, this has happened. It has gone way up. Now your account is completely blown. If you have put in a stop loss, you may have lost 10 to 20% of your capital, but you have absolutely blown your account and may even have gone into a deficit. As you can see, stop losses are critical when you're trading. You absolutely have to set a stop loss to prevent huge losses. So our last, but by certainly no means least, most important mistake that traders make is that they don't use a demo account. As we often say, demo accounts are probably one of the most important tools you can use to familiarize yourself with trading. It gives you access to trading charts. It allows you to feel what the real market conditions are like. And it allows you to really get to know the platforms, and it allows you to also understand how to enter and exit trades and how to use different indicators. So demo accounts are an absolute critical part of learning to trade. And while many people do open a demo account, they don't use them correctly. So they open the demo account, they use a huge amount of capital, and they start opening and closing trades randomly. And they find that they win sometimes and they lose sometimes, but they're not sure why they're winning or why they're losing. So the correct way to go about using a demo account is actually to journal all your trades. Write down when you open a trade, write down the level at which you open the trade and the level at which you close a trade, where you set your stop loss, where you set your take profit. Then decide on the number of pips that you're comfortable with risking and decide on how much money you're going to use. Because in a real trading environment, you're probably not going to use as much money as you're seeing on your demo account. And this is a very important part of trading. Also, because you're not going to feel the psychological pressure that you would in real trading, you really should treat the demo account as a real trading account. And once you've journaled all your entries and exits and you've journaled the strategy you use, you can actually see which strategies work better for you. And doing this will really take your trading to a new level. Thanks for watching. If you like this video, please hit the subscribe button and remember to send us any questions through to FxScouts.com.